we are going to proceed, and we're going to proceed with me talking to you about some absolute truths. Absolute truths. You're born and you will die. As the sun rises and the sun sets, we know that time waits for no one. You can't change anyone, as frustrating as that can be. And the only thing worth paying attention to is anything that you have 100% control over. And on a survey of 10,000 businesses that we ran 2 years ago, 88% of those businesses confirmed that they wanted to grow. And yet, less than 15% had a plan to actually turn the talk of growth into the walk of growth. What was worse is that 95% of them, in terms of their employees, were unaware of the growth strategy. And almost 70% of their functions, the things that make a business work, marketing, sales, operations, administration, procurement, were misaligned to the growth strategy. And it's no wonder that globally, 5.4%, only 5.4% of businesses started succeed with an exit, and 74% of second-generation businesses in succession fail. So to get things sorted, they went and got help. And what they experienced was they went to advisors who told them what to do, business coaches who told them how to think about what they should do, consultants who researched what they should do, MBAs that told them theoretically what they should do, and accountants who told them what they should have done last month, at the end of the month, and a number of people went to success seminars where they walked out of there feeling inspired and motivated and excited. Yet the stats show that 88% of them wanted growth as an outcome, not the advice. And of those that got a growth plan, 5% were able to implement it. My name is Pavlo Phitidis. I'm a co-founder of Aurik, a current CEO of Aurik, an investor in businesses, and the author of 2, thankfully, best-selling books on business growth. Reset, Rebuild, Reignite is around how you innovate out of a crisis. Sweat, Scale, Sell is how you build a business to become your greatest wealth-generating asset. And I'm going to take you on a journey in the next 40 minutes or so. I'd like to share a little bit about our origin, because where you come from makes a difference in terms of how you see the world, the problems of growth, and a solution that we have found that works. I'd like to visit the future for all of us as business owners, show you how we get it done with clients that we've worked with, and then invite you to have an engagement with us. And I will have you out at 10 to the hour for certain, with a period of Q&A and discussion that will follow. So once upon a time, many, many years ago, I was born to a family with 3 entrepreneurs, a father and 2 uncles, and they did everything right. They started their businesses, they stuck with their businesses from the get-go all the way through to the end. They invested in their staff, in their suppliers, in their customers. They were committed, focused business owners, and they worked hard. 2 of my uncles worked into their 80s because they had to. And my father worked into his 70s equally because he had to. All 3 of them generated good income. Not one of them was able to succeed with a capital exit. And their future promise relied extensively on that. My personal career, as I started by acquiring businesses at a young age, in my very early 20s, I bought a business for $1 that had $420,000 of undisclosed debt. I fortunately managed to turn that around and sell it. The second business I bought had $300,000 of debt, equally bought for $1. And what was interesting is that both those businesses were bought from founders who had been in their businesses from the get-go, provided for their families, done well, generated income, but had not built saleable businesses. I then moved into M&A for a period of a couple of years, and I was left with a frustrating portfolio of businesses, fantastic businesses in concept, in idea, fantastic businesses in operation. But the delta between what the business owners believed their businesses were worth and what the market was prepared to pay resulted in many of those transactions not going through. I then got hauled back into the family business to help with my father, only to learn and realize that although he had produced good income, he had no exit strategy, he had no exit plan, and he had only realized this at the 11th hour, after which he had decided he wanted to exit and retire. Too little too late. Fortunately, we managed to fix that business and turn it around, and we lived through that succession. Burnt out, I then moved into consulting for a short period of time, and that's when I got access to fantastic stats, partly from the IRS, partly from government services. And after slicing and dicing them, I saw that 94.6% of businesses started failed to sell. It's quite an astounding number, given the fact that people can generate good income in businesses 10, 20, 30, 40 years into their existence, but yet not succeed with a capital exit. I also then, for my sins, landed up being an external examiner for a leading MBA school, marking MBA company valuation papers. And in these papers, we looked at 7 different techniques of company valuation. We looked at the mathematics of investment and return, and we looked at the maths of value and how you grow capital and equity, as well as with an asset status that would allow a business to be sold. And I realized quickly that there are 5 distinctive levers that we all today can build in our businesses that would secure an exit for us in the future. The end conclusion was that this was a problem worth solving. And to do so, we established Aurik, and in the process, we started, built, and sold 12 businesses. Because putting theory into practice is essential when one wants to create a solution that can be applied broadly across business itself. The portfolio did well, but what was most interesting about it is that the last handful of businesses took half the time and literally a third of the investment to build to the same value as the first handful. And when we looked at what we did differently from business 1 through to business 12, we began to articulate a single, simple growth system that we applied intuitively, almost unconsciously at first, and then very deliberately near the end, which gave us growth in a simpler, smarter, faster manner all the way through. We've had the benefit of now applying that to almost 3,000 established businesses, with average growth rates across those businesses sitting at 28.9% in revenues. Incidentally, those are compound growth rates. Effectively, it doubles the revenue every 33, 34 months. EBITDA growth rates, the stuff that makes for good valuations, average out at 32.4% growth, and we got good ratings from our clients who thankfully like us. To succeed, we needed to resolve the impediments to growth, and we found them in 3 areas. In leadership, we saw that many business owners were struggling to be consistently and reliably relevant in a world of change. Change from technology, change from legislation, change from socio-political influences, change from increasing competition and commoditization. Time, one of the biggest complaints we faced was business owners saying, I need more time to lead the growth. And yet I find myself caught up in day-to-day, week-to-week, month-to-month operations. It sucks the time away from where my focus as the business owner should be. And then control. The art of delegation, getting it done simply, getting it done sustainably, getting it done once. The ability to bring teams on board, to do the heavy lifting, and release your time remains one of the biggest single challenges that we see across businesses, despite the fact that people are becoming increasingly more competent globally. In function, sales and marketing, new customer acquisition, finding, winning, and holding customers has become increasingly tough. Marketing techniques have to be reinvented consistently. They've become prohibitively expensive in a traditional sense. And how do you then cope with that in order to grow new clients and customers? When you get them on board, how do you deliver a quality of service that's consistent and reliable, especially in, let's call it, project-based businesses, where you're landing projects after projects. The ability to not find yourself being pulled back into the engine room of delivery so you can remain focused on sales and next level growth remains a consistent challenge. And then people. Crystal, you know about people. How do you find the right people to do the right thing all the time, every time? It remains a consistent challenge. Then we noticed that there were some future events that typically impede growth and value. And that is the point of growth, the argument of growth. There are two types of growth in every business. There's organic growth and there's next level growth. The timing of each and the manner as to how they come about has a big impact. Growing revenues and not incrementally increasing the rate of growth in profitability simply creates more trouble and problems as opposed to deepening the valuation of a business. When it comes to the 11th hour, and suddenly you realize after 10, 15, 20, 30, 40 years of building a business that generates income, and now look to sell it, when a buyer turns around and sees you as the epicenter, the cause of the business, holding the relationships, holding the key to future revenues and future sustainability, to realize only then that what you have built is a job, not an asset, can be devastating. And then finally, how do you bake in the 5 levers of value to ensure that when you're ready to exit and turn your asset into a wealth contributing factor to your family, that you can get out cleanly and profitably? The way we resolve them is we solve them by working with business owners to build a business into an asset of value. There are 5 distinct layers to each aspect of an asset of value, and they work in synchronicity, a top one and the next. And I'd like to take you briefly through them. The first 3 layers. The first layer is always about positioning. And positioning answers the question, what makes your business special in the eyes of your customer? We face with business owners arguments around the features of their sales, their services, or their products. And those are simply not sustainable. A price advantage is not sustainable. A service advantage is partly sustainable if it's not serviced through you or 1 or 2 star employees. What we have found consistently in the last 10 years is that businesses that understand who they serve through clearly defined segments, and through that, understand what problem they solve through the product or service they offer, but most valuably, create a great experience in how those segments learn about them, are engaged by them in a sales process, and then are finally serviced by them, distinguish themselves and stand apart in a noisy, overcrowded marketplace. Once you've got your positioning clear, one of the hardest elements to get right, we believe, in a business. The next thing is to bring that positioning to life through a system of delivery. And a system of delivery answers the question, how do you achieve consistent, reliable experiences? If you think about what generates experiences, I learn about you through your marketing. It creates an experience for me. When you engage with me, I either come on board or not through your sales systems. It creates an experience. When I eventually am a customer and you service me, it's the operations and administration's experience I have of you that gives me an overall impact of experience. The commercial systems articulate the experience. Your product or service solves the problem. Building a system of delivery of integrated, let's call it systems in marketing, sales, operations, and fulfillment is essential as the next step once you have your positioning clear. Finally, at that point in time, you now have the opportunity to get the right people to do the right thing all the time. It's far easier to get your team on board to drive a system of activities that, when integrating with other systems, create the experience that you promised in your proposition. Those 3 elements, once gotten right, give two outcomes to every business. Organic growth, in other words, growth, pedestrian growth, unexciting growth, but consistent growth, month on month, year on year, driven by the fact that you've got a clear positioning that is brought to life by a system of delivery that is led and managed by a purposeful team. At the same time, that releases your time. It takes you out of the proverbial kitchen or engine room to move up onto the bridge. I'd like to share a story of one of our clients that we work with. They were involved in general construction, which is arguably one of the toughest industries to be involved in. They were doing residential and commercial construction, running from project to project, chasing the next project to the next project. Every project was different in its own right. They were suffering under the tyranny of project revenues, in other words, having no stability and certainty ahead. They had skill challenges because each project required different capabilities and skills, and they were constantly attempting to source contractors from the marketplace to deliver on their promises. Supplier challenges were consistently fraught. When you're running one project and the next project is fundamentally different, as is the third project, you cannot get consistency in your supply chain and predictability. And all of that was eroding profit. And 16 years on, this individual was frustrated beyond measure. They came on board with us. And what we did after a period of work with them is we repositioned them away from general construction to becoming a niched basement developer across 3 sports codes. So they would build sports-themed basements. We created 6 different designs. They created 6 different designs across 3 different sporting codes, which were design suited in terms of size to match segments of clients in specific neighborhoods. They then built a system of delivery to market sports-themed basements through the sporting codes and sporting bodies and all the sporting affiliations. A single system that led to channel advantages and distribution advantages, bringing clients to them. They stabilized their suppliers. Those 6 designs typically allowed them to get consistency in their supply chain. It stabilized the skills that they needed. And we're able to not employ contractors, but employ permanent skills on board, which then further created a return on invested training. And it helped them fulfill operationally. The growth system was made up of channel marketing. They went to various sports clubs, they went to some of the sports codes, and through that, they were able to find fans of the various 3 sporting codes, and through that, market to them directly. And what was most interesting is that eventually, over time, they started to get access to memorabilia, limited edition memorabilia, which allowed them to go back to their former clients and offer them memorabilia, adding a new revenue stream in sync with the fact that they were sports-themed basement experts. Annual revenues over a 24-month period went from 2.8 million to 4.2, and the yawn, most importantly, the rate of profitability increased by 9.2%. Nice story for a business that had 16 tough years. Thanks, Mark, I can see that. Once we have completed the first 3 layers, we then build the next 2 layers. Because you have time available, we work with you in order to look at next level growth that leads to increased revenue and increased profitability. It's all about maintaining your positioning, ensuring that you leverage your system of delivery, and not disconcertingly disassemble your team through complicated next level growth strategies. With that in play, the last area of focus that we work with you on is how to deepen valuation. How do we build the 5 levers of value into your business today to assure you of income growth, but at the same time, to provide for a successful exit strategy? And the reason this matters, folks, is because there are only 2 destinations for all of our businesses. And that is either a successful exit or a closure. These 3 elements in play, or these additional elements in play, give you next level growth, deepen your profit, and release your time even further. I'd like to share one last story with you with the baker he was a fourth generation baker. His great grandfather was actually from France and was brought up in the baking world. And what he believed he had was a specific recipe for croissants. And who doesn't like croissants? It was then passed down through the family, through 3 generations, to this final entrepreneur. He built up his business. Because of all the relationships he had in the industry, he worked on an integrated basis right across the sector. And he had attempted to sell his business at the age of 54. The gap value between what he needed and what the fair value of the business was large. And that led him to us. And when we spoke to him, he said, you know what I used to love has now become something I cannot stand. Every day, my life is driven by my team, it's driven by my customers, it's driven by my suppliers. It feels that I'm doing all the heavy lifting on my own. Anything I delegate doesn't seem to sustain itself. New growth initiatives simply create more confusion, more complication, and more problems for me. And the time has come for me to step away and step out. He described a world where he was involved in operational activities, hourly, daily, weekly, monthly, annually, an inescapable trap, which had led to a dislike for an industry that he used to be passionate about and loved. We set to work with him and reposition the business into becoming expert at onboarding fresh baked goods 365, 24/7 through the hospitality sector. He went way beyond in that process, selling to the food and beverage manager as he learned very quickly in large hotel groups, buying decisions are made in consultation with a committee. We develop propositions for the finance manager, propositions for procurement, propositions for human resources, as well as propositions for food and beverage. The 4 propositions created 4 individual experiences for the segment of the hospitality sector, and it fitted hand and glove into the manner with which they buy as corporate entities. Over a period of time, he successfully landed hospitality clients and began to dominate in that particular sector. He looked for next level growth, and he only did so after consistent organic growth was in play, migrating him deliberately into dominating that sector and releasing his time. He found it in supermarkets, where fresh baked goods are essential 365 days a year to secure a morning trade. Supermarkets are thin margin businesses as it stands, and the problem sets that they faced in onboarding fresh baked goods reliably and consistently were exactly the same as hotel groups who make a promise of a continental breakfast. Similar positioning, a well-defined segment with a problem that can be solved with his service through creating an experience that would resonate with the requirements of that segment. A system of delivery in the hospitality sector that married and matched the same system of delivery required in the supermarket sector. And a purposeful team driving it all, who made ever so few adjustments to fit with the supermarket sector, but very similar to that of the hospitality sector. A next level growth opportunity that eventually saw the business move from $4.8 million of revenue to almost $50 million of revenue, and most excitingly, an increase in EBITDA of 24.3% with an impact on valuation that is profound. What I find most fascinating about this particular business is that this individual had been in the baking sector his entire life, was considered a doyen, a guru, was considered one of the most knowledgeable people in the sector itself. And yet, when he was looking to exit, $1.7 million was seen to be the monetized value of over 35 years of investment. And yet, a few years on, in this instance, 9 years on, the valuations are creeping towards $80 million. Let's visit the future today, because I'd like to share with you exactly what happened in the buying process. If we start with the end in mind and argue that it's our role as every business owner to be sure that not only are we accelerating income, but we're building a business that we can successfully exit one day. Let's work on the basis that on average, across most sectors and industries, on average, it varies depending on the stage of the business, depending on the economic environment we're in, depending on a number of factors. But on average, the starting valuation point is 2 times profit. And let's make an assumption that this particular business is producing a profit of $1 million a year. It would make the valuation of the business today $2 million. And the debate between the buyer and the seller begins. The seller asks questions in order to erode the value and improve the pricing of the business, because anyone who can acquire an asset at a lower value stands to make greater rewards and a greater return down the line. The buyer hopes to increase the value on a consistent basis. When the first question is asked by a sensible seller or buyer, what makes your business special? Because when I look at your business, what I notice is that there are 10, 20, 30, 40,000 competitors offering similar products and similar services. What distinguishes your business from theirs? The next question they're asked is, how does it all hang together? Because surely when I buy your business, tomorrow you're not there. So what makes the business work? How do you market? How do you sell? How do you service? Where's the evidence of it? The third question they ask is, well, who does it? Without you there, who will do it? As a buyer of a business, I buy the business today on the basis that the business tomorrow will perform as it did yesterday. And then hopefully I will apply my own effort to get additional value and growth. And on the question of growth, how has the business grown? Because a business that doesn't grow pre-sale has no argument to show that it will grow post-sale. And then finally, how independent is this entire set of value from you? Because if you are the cause of value, if you're the cause of the system of delivery, if you're the cause as to why your team is there, and if you're the cause of the growth, well, then what am I buying? With each of these arguments positively supported, effectively what you do is you take a 2 multiple and you add an additional multiple in each instance. It's this manner that lets you take a business valued at $2 million to the very same said business valued at $7 million. The opposite also works. To the extent that you cannot provide supporting arguments, the value of the business erodes accordingly. This is the fundamental difference in the buy-sell process that defines a business as an asset at $7 million and the very same said business, the 94.6% of businesses started at $1 because they are seen to be a job. I want to briefly talk about how we work with you in order to get your business built into an asset of value. And the best way to talk about it is to share an analogy. The analogy is very much centered around a ship and seeing yourself as the captain of the ship. And on any ship, there are one of 2 places you can be. You can either be on the bridge where you have a 365-degree view, you have instrumentation, and you have the means of managing, directing, and controlling your business, where the majority of your time is spent ensuring that you're moving from where you are to the final destination. Alternatively, you can find yourself in the engine room. And if you notice, the engine room is below decks. It's where you haul the coal to get the propellers turning. The engine room is essential because turning the propellers gives you momentum. But the problem is that when you spend time in the engine room and not on the bridge, you get momentum, let's call it income growth, but you don't get the direction right. And very often, if you don't make that final destination, every ship eventually runs out of food, fuel, and water and finds itself out at sea with nowhere to go. So let's talk about the role that we opt to play. that of being the captain on the bridge or that of being the captain in the engine room. And this matters because in the way we work with you, we set a destination, and it's clearly called the asset of value. From where we are today to the future, we are targeting the structure of an asset of value and the benefits that an asset of value offers. And we work with you on a journey that runs over 24 months. The first phase is the diagnostic phase. And what we do with you over there is our teams engage with your teams, and we run system diagnostics. 207 activities make up a single integrated business growth system. We look to see what's there. We look to see where the gaps are. We look to see what can be improved. We look at the numbers and benchmark the numbers against future valuation outcomes. We look at the team and understand the team dynamics to make sure that the leaders are all playing to their strengths. And then finally, we look at contextual strategy and ask the question, ahead of time from where we are today, where is the market moving? What are the forces driving the market there? And how do we position ourselves to be relevant at that point in time? With that done, we then set 10 growth goals with you. Those 10 growth goals are placed onto a dashboard and broken up into measurable milestone steps of action. From there, we immediately go to the positioning of the business, the underlying foundation that leads to the success of building out a business into an asset of value. And with our teams, we work with you to position distinctly and uniquely within specified segments of clients and customers that you believe are the best fit for your ability to service and deliver. We understand them deeply and profoundly, and then move into establishing the build-out of systems with your team members. So the team involved in marketing, we would work both with you and that team. And we would work with you and that team in order to build out the activities and the sequences with measured outcomes that will give you a good impact on marketing. We then do so with the sales team. We then do so separately with the operations and fulfillment team, and then with the administration and finance teams. And what is so valuable about working with your teams is that in the process, they have their voices heard, their ideas shared, and their value brought to the table to build out a system that will enable them to not only immediately implement the system, but they themselves will be held accountable for the performance of the system, because as co-creators, they are trained as it's built, and they become accountable through a process of ownership. And through that, we get very, very immediate impact on the system sets of lead generation, of lead conversion, and of lead fulfillment done. We move through that process in building the system of delivery. We align the team to operate the systems with you. And in that, the measured outcomes and team performance metrics are all put in place. And with that, time is released. And with the time that's released, we focus the majority of our remaining time with you on identifying next level growth opportunities. And the reason we do that is because we link our fees to your growth outcomes. 70% of our fees are linked to your growth outcomes. We are not consultants, we are not advisors, we're not business coaches, and we're not success seminar producers. We are growth partners. And if we are certain that we can have a positive growth impact on your business, we align ourselves by locating 70% of our fees on those growth outcomes. The way that we bring this to life is that in working with you and your team, we have up to 12 expert accredited facilitators that provide the support to use data, activity sets, process sets, to implement and configure your specific growth system aligned to the growth goals that you've set. They have seen many business systems, they've worked with many teams, they've worked with families, they've worked with partners. And what's essential about the facilitators is they are experts in their domain, hence we have 12, 13, 14 of them over the 24-month period, as opposed to one advisor or two consultants. And their role and their function is to bring to bear the processes and systems using the data and techniques that we have to bring to life lead generation, to bring to life lead conversion, to bring to life lead fulfillment, to bring to life lead administration, alongside with the teams, and through that ensure that your teams are able to operate those systems on your behalf to release your time. At the same time, we lock and load an asset of value dashboard, and we use that to navigate, much as you see in this diagram above, the path of where we begin to the final destination, which is to achieve an asset of value business. We also use it to present a visual representation of every system set that's built so that we can optimize lead generation independently of the other systems. And we can optimize lead fulfillment independently of the other systems. And once we have a visual representation of each of the systems, we use algorithms to identify how to integrate and bring them together into a single, simple, smart growth system. On the dashboard, you have the opportunity to also delegate responsibility of system performance to your teams. So the lead generation team, the marketing team, will have their own independent dashboard with their own independent system sets that will allow you insight into whether they are hitting monthly targets that they're committed to hit. And the same way operates through the rest of the operational framework in a business. It immediately gives them control and a visual representation of their performance, and it allows for great delegation opportunities. I want to end off very briefly telling you why Aurik is your best partner to get it done. There are 5 reasons. What's in it for me? The 5-finger salute. We need to work with you to close the gap and maximize your economic prime. However long you see you have in your business, wherever you may be in your business, all of us have an economic prime. And in that economic prime, identifying a growth partner that will work alongside with you to maximize the impact of your time in that business is essential. In the first instance, we align ourselves to you. Again, we do not bill you, then leave you. We work with you as growth partners, and we attach 70% of our fees to the growth outcomes in your business. We put our money where our mouths are, because we would never onboard suppliers in our own business that don't do the same. That's just the business owner entrepreneurial mindset. Next, we have around 13, 14 expert accredited facilitators that work with you and your team across the business. Horses for courses. People who excel at strategy might not be the best people at lead conversion or the sales system sets. People who are excellent in governance might not be the best people in lead generation or marketing system development. We have immediate impact. The fact that we work with you and your team means that we take the entire business on board with you and us to create your asset of value. There is nothing more frustrating than getting a great growth strategy. And as we saw earlier, only 5.4% of businesses that secured a growth strategy were ever able to bring it to the ground and implement it. The fact that we attach our fees to your growth means we need a growth impact as fast as possible. And the shortest route to getting that done is that when we design the growth plan together for your business, to build it out into an asset of value, as we implement it, it needs to be executed by your team at the same time that we implement it. Fourthly, we're tangible. Beyond talk, there's real walk, and it's evidenced on a dashboard that gets built specifically for your business. It creates a visual system of delivery. It enables team accountability. It guides goal attainment, and it produces a body of evidence to support valuation in the future. When that question is asked, what growth lies ahead? You have the ability to point to the growth in the past. When it's asked, how do you get the growth happening? The system of delivery is visually represented and shown to be in play. And when the question's asked, who does it? You can see team members responsible for the performance of the individual systems. And then finally, it's complete. It's a single, simple, smart asset of value growth system. And in the process of us pursuing growth today, we bake in and build in the valuation levers for tomorrow. I want to end off with my ask. And my ask is simple. Let's meet and see if we can impact your business. If we can, we will produce for you a growth partnership proposal. It'll include costs and a 24-month plan to Aurik your business into an asset of value. If we can, and you accept that proposal, you secure a dynamic growth partner that has delivered to date across close to 3,000 businesses, almost 30% compound annual revenue growth rates, and just over 30% EBITDA growth rates. It will support your business in capital raising efforts, and it secures a cogent, clear, defined exit strategy for you, built and based on how buyers buy businesses. And if not, we establish a relationship for the future. Things in business change. And with that change, knowing that we exist and us knowing that you exist, opportunities are brought to the table consistently. We very actively engage with our clients through introductions, because through those introductions, if well made, it supports the growth of our clients. And for the simple fact that 70% of our fees are attached to the growth of those clients, they become a priority in how we go about doing our business. And with that, I'd like to close my presentation. The promise was 45 minutes. We started 5 minutes on and we're 47 minutes in. And I'd love to open the floor for a couple of questions. Noel, I'm very, very keen to hear how business has gone for you last year. I see that you have 2 businesses that you're involved in. Are you located in Canada or in the US now, or both?
I live in Canada, but pretty much all our business is based in the US.
Yes, I saw so. I saw so. Your most recent business is incorporated in Canada, correct?
Yeah, that's right.
Yeah.
Yeah. So the 2 businesses are, one is a consulting business, and it's supply chain, typically for mid-size enterprises, manufacturing companies. And in the process of doing that work, we discovered that perhaps the biggest opportunity in the end-to-end supply chain is in production scheduling in the plant. And so we're developing a software company. We started literally just before COVID, and it wasn't a good time because the 3 prospects we had, basically, you know what happened to supply chain, you know,
they're fragmented and fell to pieces. And then we had changing policies operating around what you should insource and what you should outsource and what you can insource and what you can't outsource.
Exactly.
So, you know, beyond COVID, we had the problems of uncertain trade relationships, which really interfered with supply chains. COVID saw China stacking steel and hoarding copper and hoarding all the essential ingredients of material development. But it must have created some really interesting opportunities for you, because getting that problem solved is a significant problem.
So the pharmaceutical supply chain is long and complex, and you know, a pill might have been sourced in the raw materials, and the intermediate materials may have gone through as many as 20 stages of production, many of them in different countries, over a period of 6 to 9 months. So the opportunity during COVID for disruption was huge. And where before you could place an order for the active pharmaceutical ingredient and it would arrive from India a few weeks, months later, you know. So the sort of things that we were doing in a consulting context was building natural language processing systems that look at the news to identify what the issues are in India vis-a-vis the supply chain that you hooked into. And it was amazing how valuable that sort of thing was to our customers.
Well, I think it's going to remain valuable, and it's really worth scaling that aspect of the business, because I think getting something like that right, that would carry some very interesting valuations for the future. Crystal, how have you found things? You constantly plugging gaps, either through getting the right people to do the right thing at the right time for your clients, from a consulting perspective, or fulfilling the recruitment role, right? You have to unmute. I hate saying that. So I've been saying it for over a year now.
Okay, I just unmuted myself.
We can hear you perfectly.
Yeah, we've been working and moving pretty steadily. During COVID, however, we did not have much growth, but we were steady to be able to support our existing customers. When COVID came there, companies need people, obviously they need people, but when COVID came, a lot of effort that some of the customers had planned was put on hold.
Yeah.
And so when projects were put on hold, then it got to a point where we were maintaining. Our customers just were maintaining. So for the past year, we have not had much growth. And so we're hoping as COVID becomes more stabilized, that some of the projects that our existing customers put on hold will be released, and they'll have a need for additional customers, people. And we're hoping that we'll be able to capture new customers as well. But it's just been pretty steady, and we've just been maintaining with really no growth for the past year.
You know, it was fascinating what we did. We were quite fortunate because we also have some clients in Hong Kong. And that meant already late 2019, we were being alerted to the impact of the lockdown. And because we rely so much on the growth of our clients to secure our own growth, we had to think on our feet very quickly. And we put a strategy together called Reset, Rebuild, Reignite. And what it meant was we placed an argument into the market saying to our clients, the buying processes, which you yourself have expressed, Noel, you've just shared as well, of how companies bought our services before will change. And we have to understand how it will change. What are their circumstances that will lead to that change? The problems we used to solve pre-COVID are going to be different to the problems during COVID. And what would that look like? And we implemented this strategy where all our clients shifted into a different gear. And for the early stages of the lockdown, where the lockdown was in play, we capacitated our clients to move into a relationship engagement as opposed to a transaction engagement. And what the relationship engagement gave them was a head start into how the circumstances of their customers and clients were changing. So we could respond with different marketing approaches, different sales engagements, different services and solutions. The second thing we did, Crystal, which was really interesting because it changed the nature of the teams embedded in our clients, is we very aggressively and actively moved into digitizing significant processes right across our client base. And we noticed that in the beginning, a lot of people were profoundly insecure. Does it mean that you're replacing me with technology? Will I have the skill set to be able to meet and manage the responsibilities you're giving me using all the underlying technology? And As the tide rises, some people rose with it, but many people fell behind. And we've already noticed that across our clients in recruitment, there is a different requirement being placed in very traditional work jobs, having a strong affinity with technology in order to be able to run those processes that were put in place during the course of the last year. So I think the environment's going to change, and the opportunity to amplify that message, I think, will resonate with fast growth firms who are really looking to hire talent that has a very stable comfort with operating and using technology. It's something worth considering and looking into the future with.
Absolutely.
John, how have you found things? What's happened with you and your business?
Well, in the last year, we've been through quite a lot of change. We manufacture office chairs based in South Africa, and we've had to, well, essentially we've halved our employees, had to really go back to basics. We've gone online. Our traditional customer base were dealerships and retailers, and now it's the end user. So it's been a big learning curve in the last 12, 15 months. And
so, you know who took a harder hit than you? Were all the physiotherapists and the chiropractors. And
yes.
Yet we've got a couple of clients in the US and in the UK in physiotherapy and chiropractic. What was so interesting about it is their businesses began to pick up. Eventually, their businesses began to pick up because most people who were working remotely were working from kitchen tables and dining room tables and lounge tables and what have you. And ergonomically, it placed an enormous amount of pressure on their physical body. And what was equally interesting is that because with all the uncertainty and the insecurity around job loss as a result of a smashed economy, people were working longer hours and harder in order to secure their positions within their organizations. So they were actually positioned ergonomically at a disadvantage for longer hours in a more sedentary environment, and it led to a boom in the chiropractic business that we're involved in. It was fascinating how that was an unforeseen outcome of what we've just described. I really think that the message could not be better landed now, that office chair manufacture is an ergonomic issue beyond design, because I think the home-based office chair purchase last year and the early part of this year must have rocketed. So it's about finding those distribution channels and getting into them.
Correct, yes.
Neil, how have you found things?
How have I found business?
Yes, how's business been for you?
Well, I mean, so you know, for the last 5 years, I've been involved in the telehealth space, and you know, it's one of those environments that, you know, when people see it, everybody thinks it's a fantastic idea, and yet we battle to get traction until COVID comes along, and people are forced to stay at home. But the reality is, people still get sick. They still get colds, they still get flu, their kids still get tonsillitis. And suddenly, the last place they want to be seen or want to be found is in a doctor's consulting room. And technology and the ability to be able to reach out to your GP using proprietary technology in a smartphone suddenly becomes extremely attractive. And, you know, that businesses have grown 1,000%. You know, we went from doing probably 100 consultations a week to, at the height of COVID, 3,000 consultations a day. And it's a fascinating thing, because, you know, there's this massive debate right now, you know, what is to happen post-COVID. and it's just a genie that you're not going to be able to put back into a bottle. People have now realized the fact that while it doesn't replace a face-to-face consultation, it's extremely efficient. It's about 40% of the cost, and people will continue to use it long after COVID is over.
I think it's going to be very interesting to see what new habits have been developed and how people engage with each other, and which of those will stick. I noticed 3 months ago, JP Morgan, Google, Microsoft, all of them effectively technology companies, are calling their employees back to work on site. And it's going to be fascinating. And Crystal, I think in your world, it's going to explode when people start to realize the cost of remote work and the cost of on-site work. There are pros and cons on both sides. And I think it'll shift and change from sector to sector, but it's going to be a very interesting space to see how it emerges. Gary, are you with us? Are you still there? Not. I think, folks, thank you very much for attending. It was great to have an opportunity to address you. We'll be sending out an email to all of you. We'll have a recording of this event on the email itself, an invite to meet with us. It will be great to have a conversation. Let's see if we can make a growth impact on your business or not. If we can, we'll put a very, very exciting proposal forward to you, aligning ourselves to your success, because it's the only way that relationships sustain or are built. And we'll hopefully see you on the other side of this. Thank you very much for giving us the time to be there. I hope you got value from it. And we'll be engaging further from tomorrow onwards. Thank you all very much for being here.
Thanks so much.
Thank you.
Thank you very much.